Hey everyone, Sean Maloney, Digital Business Masters. Another overview call, all things strategy, all things Bitcoin, all things crypto, and most of all, how we apply our digital assets towards a business plan, a blueprint that allows us to enjoy equity and yield at the same time so we can then build to a critical mass in our digital businesses that allows us to create a living. Yeah, that's the ultimate goal, and that's best served with education and application. So the first part of this call is always about the big picture. This is the most valuable information on the planet. There's no question about that. And it's a case of making sure we share this with as many people as we possibly can, as we have done for most of the last decade. Okay, we formalized that in a form of an academy in 2020. We're still here, now approaching 6 years of age, quickly. And we're very proud of that, with a global coverage of coaches that are some of the best you'll find in the world when it comes to not only doing what we say, but also having served the time to be able to have the authority. They're not just YouTubers chasing the next shiny object. The second part of this call is all about application. So realization education is great, but if you don't apply that, then you're just going to find yourself being a perpetual student, right? You're not going to learn much out of that. At some point, you're going to have to take the leap and become a formal business, which is what we help people to do with the DBM business model. On that regard, I'm not here to give you any advice, certainly not financial advice. You're all grown adults. It's not our job to tell you what to do financially. If you've finally realized that your traditional financial advisor, your traditional bank manager, your traditional boss, your traditional government has not quite come up with their side of the deal in all the things that you've been doing over the past decades, then welcome to the alternative. The alternative is to always seek financial education and put that education into steps, first of all, and then actual applications so that you can start to become what's called sovereign, if you so wish. Sovereign is something a lot of people romantically want as they start the process, but when they realize how much responsibility and time and fortitude and resilience it takes in order to become truly sovereign, then we find quite a few people are quite happy to remain reliant on bosses, banks, and governments, if not 100% reliant on bosses, banks, and governments, which is what 99% of the global population tends to do. So you'll find in the business model, with all the information that sits around the business model, that you at some point you'll come to that decision. You'll come to that need to decide just how much you really want it. But isn't that the same when you're getting fit, building muscle, running a marathon? Yeah, you get to the point where you think, oh, do I really want this? And obviously that's why most people sit on the couch. So that'll be your decision. We're here to support you to become match fit. Either way. Why we're so passionate about what we do? Well, because of this very simple infographic. Many, many decades, people will assume, because that's what they've been taught by parents, teachers, bosses, banks, governments, that you get your qualifications, you go out there and do the best you can in converting those qualifications into energy and time that you put into other services of others, normally a boss. The boss will then convert that skill and energy into a reward that people call a wage, and that wage is made up of what's called currency, more relevantly, fiat currency. Okay, no problem. That makes sense. But what is it if the fiat currency you're being rewarded in is losing its purchasing power between 7 and 10% per annum? What do you do then? Well, if you even recognize that fact, if you're not cajoled into believing that inflation's normal and you having to put in more effort and time to compensate for that is normal, then you may never notice. You may never notice the fact that you're putting more and more and more and more time and effort. Two parents are going to work. You're working through 2 or 3 jobs in some cases, some people these days. You may not even notice because you're working so hard for the month you're in that you putting away a little bit for your future in the form of savings or more a pension, that's devaluing as well. So as every week and month and quarter and year goes by, while you're living in the moment for the next Christmas, the next 2-week holiday, the next fix of adrenaline, you're forced away from the true goal, which is to be able to convert your energy and skill into life opportunity and choice. And most people, unfortunately, get to the point where they're in the 60s and 70s, God willing, whereby they hit that wall, they realize that, oh, well, somebody told me I'm supposed to retire now because I'm at a certain age. Well, how am I supposed to do that? Because they were chasing purchasing power from being 20. So how are they supposed to live off 40% of what they were earning when they've got another, God willing, 20, 30 years of existence to live? This is what's called broken money. If we fix the money, we fix a lot of problems in your 20s, 30s, 40s, 50s, 60s, 70s, and beyond. So we fix that by, first of all, understanding that we have to take ownership of something that represents sound money in our existence. That's step number one. Recognize that you need to convert some of your daily, even hourly, energy and effort and skill into the ownership of sound money, not currency. Currency does all the things that money does, except one thing. It doesn't protect your purchasing power. So you need to find, at all costs, aspects of human infrastructure that do protect your purchasing power. And at this stage, in 2025, in our whole lifetimes, there's only 2 things in the world that truly do that. And your job is to determine what that is, what they are. So you start to accumulate that on balance sheet. You build your own treasury. And you do that as quickly as you possibly can, with as much discipline as you possibly can. In fact, you even get to the point when you're building it out that you're thinking everything you buy is a sacrifice, a delay, a stall on helping you create your treasury more quickly. That's the level of mindset you get to with that cup of coffee, with that pair of trainers. And that's okay. That's okay, because the reward for building up a store of value that is protecting your purchasing power is profound. But that obviously isn't enough. What you need to be doing is also having an eye on how to convert a proportion of that built up balance sheet, that treasury, that protected purchasing power pot, to regular, manageable, consistent cash flow. Now, this is hard. Of course, it's hard. But the bottom part of this slide is all about you taking exactly the same skill and energy. You've all got to go out there and earn a living, and converting a proportion into what I've just been talking about, so that you're owning assets. The amazing thing about it is, and any of you who've been in business for any length of time know this, especially if you own the land, the building, and the equipment in your company, is that the amazing dichotomy is that as they print more and more and more devaluing currency, we call dollars, pounds, euros, etc., guess what that does to the price of the assets that you own? And it's in that where you're able then to be in the front, you're front running what it is to convert yourself from buying liabilities to funding liabilities. And it's a very, very profound shift in a lifestyle. And I can't speak highly of it enough, because I personally am a product of this, and we've helped hundreds of thousands, hundreds, thousands of people around the world to be able to at least see the same. Whether they have the ability to pull it off and see it all the way through to the end game, that's a different topic. But we help people see it at least, which is why I dwell on this slide every week, because obviously people watching this across the channels, especially if you're from YouTube, remember, if you're from YouTube, hit the bell, hit the like and subscribe, and you'll get more of this information going forwards. Now, that's all very profound and interesting and clever. But what does it look like operationally? Well, it's a whole mixture of things, as you'd expect, if you're going to take responsibility for creating a mix in what's called your digital business plan. Now, we do our best at DBM to define and find and define and find and redefine and find lots of different ways on which we convert the absolute stalwart, the balance sheet aspect of our business, which is the easy bit, by the way. It's called Bitcoin. In case you haven't noticed, I've been under a rock for the past 8 months. Even the biggest companies, the biggest banks, the biggest governments in the world are slowly realizing this now. In fact, this very week is crypto week in the United States of America. Finally, the penny's dropping, even for the biggest and most profound influences of our societies that exist. We've been doing this for well over a decade. We spotted this as a consequence of 2008 in terms of owning gold and Bitcoin as sound money. And we also embarked on the journey of figuring out in what's called the world of DeFi, decentralized finance, as opposed to the world of TradFi, which is traditional finance. We didn't have any choice but to work with DeFi over the past decade, because the TradFi that exists today, only barely 6 months old, by the way, has only existed recently. So we've been working in DeFi all these years and going through the good, the bad, the ugly of what exists in a highly unregulated Wild West state. But it didn't frighten us, because what we've learned over the last decade now puts us in huge strength as traditional finance steps in and starts to do exactly what we've been doing for many, many years to the best of our ability. To the best of our ability. What do we do? Well, one step is to utilize what are called stable coins and assign those to what are called smart contracts with companies that are looking for liquidity, and in return for that will give you back a yield. You find a lot of this going on with the exchange markets, the forex markets, etc. And it's a great space once you get it right, but it's very difficult, very challenging, because a lot of the companies that come from DeFi are trying to figure this out for themselves as well. Now, this has just become profoundly accelerated, because at the highest levels, whatever you make of it, and you'd have to go in with your eyes wide open with this type of stuff, but as you get in the regulations now coming in from the Stablecoin Act and other things that are happening around us as we speak, then you find, let's say, more traditional economic companies, banks, institutions vying for your hard-earned assets. Now, that doesn't mean that it makes it necessarily easier to what we've been doing in DeFi for over a decade, because you're obviously removing custody from yourself to something else. Now, it's horses for courses. We don't need to overthink it, but you just have to be aware that if you don't hold it, you don't own it. And that stands for DeFi as well as TradFi. We're aware of that. But there's an interesting balance going on now between where we allocate our equity as driven at times like this, when Bitcoin shoots from 100,000 to 123,000 in less than a few weeks. That, for us who understand collateralization and all the things we'll talk about in part 2, that gives us a chin-scratching moment to prepare for what we're going to be doing as the DeFi rounds come through, but also to start to reallocate proportions of what we have in headroom to the burgeoning traditional finance sectors that are now with us. So we cover a lot of that in the academy these days, especially in the workspaces, as we ourselves figure out how to operate with the likes of Master and Strike and Metaplanet, etc., etc., etc. Yeah. So it's very profound, utilizing the rails, as we call them, of stable coins to create yield from our balance sheet equity. It's very profound indeed, and an ongoing interesting journey, because we chase high yield per month. We're not happy anymore with 2% a year. We don't get kidded into that anymore by the eons of middlemen that sit between us and our pension plan, for example. We choose to go and drive this ourselves, which brings massive benefit if you get it right, but can also be challenging, of course. That's why we work together inside the academy. Now, the other option is to operate what I call in the altcoin space. Now, this is even more challenging than the USDT space, but equally fun. It's all fun, this, right? But it's got to be done in a measured way. And it's more fun when you have the education and the experience and the support of others. Yeah, the reason people find it challenging and difficult is because you're on your own in many ways in this space, because you're working through, as we are right now, an internet connection. But when you work together, you can find these different ways. And there's lots and lots of different ways. But the reason we're so resilient with altcoins is because we can command equity plus yield in one ecosystem. Is that easy? No. Is it possible and is it happening? Yes. And our job is to be part of what's called the tokenomics of creating the balance between equity and yield, because you won't want to ratchet off itself. That's all we're looking for, just as we've done with Bitcoin for well over a decade. Yeah, Bitcoin was like an altcoin back in the early days because not many people understood it. And as soon as it had a little bit of a pump, people were dumping it. A little bit of a pump, people were dumping it. It was mainly retail driven. Now it's traditional finance driven. The professionals are in, right? They understand that they're not going to let the thing dump. They're just going to let it slowly climb. That's what we're looking for right now. And it's been happening since November 2024. So we seem to be on the right side of history. Our job now is to understand how to take advantage of that traditional finance sound money mechanism and put it to work in as many ways as we can find in DeFi and TradFi to create cash flow. That's the name of the game from here on in. Now, to support that entire premise, all that thesis, we came up with a academy subscription model about 5 years ago. And I'm very proud of many, many people that we have in the systems and income thresholds in this particular model, because they're now in a position, because they have educated themselves, they are made of the right stuff, they have got themselves into what it takes, and now we work together. The whole team works together, not just to carry on pulling through what we've been doing for the past decade, but also to figure out and plan, as we'll talk about in part 2, how we're going to move next when we get these shots of energy coming at us from Bitcoin or from DeFi projects that reallocate and all the things that go on as your factory pumps through time. That's the main thing I'm proud of. Yeah. Alongside, of course, the team of coaches that have helped us to achieve that. So we're very lucky, very, very fortunate, because this space is incredibly lonely. There's a lot of hyenas, a lot of wolves, a lot of people who will attack you. So if you can circle the wagons and move across the prairies together, you've got a much better chance of meeting the Pacific Ocean. So you start where you're at. If you're still in mindset and skill and still trying to figure through things out, and get in the skills subscription and get access to all the different things that we offer. Okay. If you're an existing skills subscriber, get up to $25 as quick as you can, because the coach team have just come up with a brilliant master program that's going to give you every single step you need to take over a 12-month process to not only get into gear, but stay in gear as you move your business into the future, which is it takes years to get yourself up to the place where you've got the business balance sheet funding your lifestyle. So you've got to think of it that way. And that's what the coaches have built. So get yourself where you need to be to access these things and move forward accordingly. All right. Now, let's get into the business end of what this call is about. It's about the strategy of what we not only have seen happening over the past decade, but also what we foresee. And if you've been listening to me over this past 7 months, as I've been operating these digital strategy calls every Monday, and you go back through the records and through the library of information, you'll have seen us talk about this yellow line. And even back late last year, we could see the transition taking place. And lo and behold, here we are. So you can't predict the future. You can't, create the future. You can't say what's going to happen, but you can create a scenario whereby you can put yourself in front of the future. So you are creating the future as opposed to predicting the future. That's what we do, right? And we're not to blow smoke, but back in, this time last year, beyond, even further than that, but certainly start of 2025, we were giving all the reasons in the world why we would see all-time highs in 2025 just in Bitcoin. So this little marker has just gone up and up and up. In fact, this weekend, I've had to change this yellow marker 3 times. Yeah. Now, that doesn't happen all the time. You'll find you've got 10 to 12 days of activity in any given year where you're taking advantage of these massive spikes. That's traditionally what's been happening, as we have enjoyed an average of a 68% CAGR with Bitcoin alone over the past 14 years. It's not been difficult for us to see this because many of us are old enough to have experienced what went on in 2008. Many of us had our businesses affected by what went in 2008, and that fire still burns. This time around, thank our stars, we were astute enough to put ourselves in front of sound money in the form of gold and Bitcoin, so that now, over a decade later, we're sat with full vindication and prepared to take on anybody. We even have enough confidence to talk the way we're talking on public YouTubes like this, and a fully established 5-year-old academy that enables us to keep banging the drum because we've got the time to bang the drum. We're not sat in traffic. Yeah, we're not sat in a desk 10 hours a day at the behest of somebody else. We're able to research and talk about some of the things you'll hear me talk about in the next few minutes. And that's just adding more and more and more gravity to our ability to have the confidence to stick with what it is we're convicted about. A conviction does some very special things to your energy. Yeah? If you've got people around you, friends and family who are despondent and depressed and feeling punch drunk because of everything I've been talking about with regards to fiat currency, then you know where to send them. They might not listen to you, but they may listen to us. Because we don't just talk about it, we've done it. So very confident right now, as you'd expect, as we move through the gears. We never sell our sound money, ever. And in part 2, I'll show you how we're able to do that, as well as de-risking cash, as well as having the ability to leverage headroom into relatively high risk yield. The model works. Where do we anticipate we're going to be over this next 5 years? Well, if you thought the last 5 years was impressive since COVID, you want to be seeing what's going on next. If you're in a position whereby you've been at this long enough now to have confidence about wallets and exchange management, asset management, mathematics, calculations, spreadsheets, cash flow planning, balance sheet organization, if you're in that realm, which most of the people in the systems and income subscription levels are, your next 5 years is all about making sure you're in control of the rest of your days. And then equally important, in my humble opinion, is for you to be able to pass back in legacy to your kids and grandkids, safe in the knowledge that you did your bit, rather than spending your children's and grandchildren's credit cards, which is what the fiat system basically does. It passes bad debt into the future. You created a situation whereby sound money looks after your bloodline. That should give you shivers and that should motivate you, because you can see what's coming and we're going to ride it and you're going to be with us. Now, let's get into the science bit. I like to cover on these sessions the macro and the geopolitical in one sitting. I know it's a lot of information. It's why we record the session, and it's why it's over on YouTube and across the DBM channels, because this takes absorbing. Okay, everything I've said so far is on repeat, because you have to understand that bit to recognize the importance of this bit. Yeah, and honestly, I'm just running out of room. I'm having to be selective now with a lot of the information that I'm fortunate enough to be able to sit back and read about as I'm walking the dog, as I'm sat in the gym, as I'm doing whatever I'm doing in my daily life. Yeah, that is only a lifestyle that has been afforded because of following the business plan over this last decade. Now my job is to regurgitate that, if you will, out into the world in a succinct manner as I possibly can do. But it's getting difficult because there's such a lot that's feeding the sails as we have the spinnaker up and we're just flying through this next phase now as we sit. Now, we're experienced enough and long in the tooth enough to know that it's not always the case that you've got the spinnaker up. Sometimes you're fighting headwinds like you would not believe. But if you know that's the case when you're running a factory, if you expect problems, if you expect challenges, then you're not surprised by them. Yeah. All you can do in running a business is to level out the peaks as much as you possibly can. But there's always going to be peaks. Just accept that. That's why we like to work together, especially in the DBM workspaces. So some headlines I picked up on that I thought were profound and interesting this week, especially as we look at the dichotomy going on between North American continent, or actually USA specifically, and the European continent in terms of how they're managing the, I'm talking about political level, the insurgence of this technology into everyday life. One government's fighting it, another government is welcoming it. But behind the scenes, I think it's safe to say now that all sensible professional companies and institutions are doing their bit to make sure they understand it. That includes European companies such as BBVA, banks, I should say, company, institution, bank, whatever. The term is interchangeable. They're all there to make money. So the BBVA has recognized this over this past week in terms of putting Bitcoin onto their portfolio, converging a little bit of politics with macro. The Trump administration is to this week report on the crypto and Bitcoin policy. Okay, that's coming this week. You may have picked up where Cleone did a fantastic workshop on this today, by the way. So go into the Systems Plus forum and you'll see the recording of all the detail that goes on about this. So that's going on in terms of a strategic Bitcoin reserve, which is a massive term and very important. And we were getting excited about the Bitcoin reserve taking us to 100,000. We're now excited about the Bitcoin reserve taking us to 200,000 in short order. So the whole idea of accelerated accumulation is what it's all about. And then you've got the other dichotomy, you've got the real interesting politics, if you can put yourself through it, where you've got the America Party committing to BTC, which is this famous tweet that came through from Elon Musk last week, that I touched on last week, where they were asked a question specifically, are you going to put Bitcoin as part of an America First, America Party policy? And Elon Musk responded, absolutely, fiat is hopeless. Bitcoin is almost as BS as fiat money, so basically what he did was back in 2020, he was deflaming the whole thing about Bitcoin, talking about Bitcoin as almost as BS as fiat, right? That's 2020. And this then is a snapshot of what he said last week in terms of whatever date it was last week, it was something like the 12th, I think, something like that, of July 2025, talking about the need for the America Party, whatever that is, to put Bitcoin as part of its policy, okay, stating that fiat is hopeless, so yes. So that's what I'm trying to say there. So it doesn't really matter. It's a case of, as we know, politicians will drive forwards to get votes and do things that appease and get yeses. Okay. That's always been the case. But in this particular era, over this next 5 years, particularly built off the back of what's going on with the policy shifts in the US, and in my opinion, what will happen in Europe, because it will have to, and all the BRICS nations that are already looking after themselves, it's a case of knowing that it's no longer just going to be a vote chaser to follow what's going on with sound money. Sound money itself will be a fundamental prerequisite. And that's nothing to do with politics in my mind. This is the way it should be. You fix the money, you fix the world. I know it's not as simple as that, but in terms of taking huge steps for the next round of humanity, it's got to be a better place to be, to shake off the ravages of 100% fiat that we've lived through all our lives so far since 1971 and come up with a new form. All we're doing as individuals is intercepting that and anticipating that ahead of the politicians. That's all. Which is not really all, is it? That's quite profound if you think about it. So I take pains on that particular tweet because it's just so interesting to see the change that these people have, whoever they are, whether they're Musk, whether they're Trump, I don't really care. What matters is the fundamental right thing is being done. Okay. Now back to the operational side of what goes on. OTC, that means over the counter. Exchanges reporting now, we've been reporting on this for the past 6 months. They're now reporting to be very low on Bitcoin availability. Now that makes sense because of what we've seen over this past week. Yeah. A week ago, I can't remember, what Bitcoin was around 110,000. It's not normal, right, for any asset to appreciating a market price that quickly. Obviously, that's not normal, and we can anticipate a pullback, of course. But then you look at it again and think, well, hang on a minute. If all these institutions are buying at the rates they are, and only so much of this asset can ever be produced in any given time frame, and all the reserves that have built up over the years on over the counter and on the retail exchanges are running down rapidly, then the price has no choice. Now, we're all old enough and long enough in the tooth to realize that there's no free lunch in this life and things aren't that easy. But it is interesting, if you own any level of this asset, to start to be seriously planning now where you're going to be going over this next 6 months in particular. So we're watching that and we'll see, but supply and demand is supply and demand. It is what it is. It is what it is. And it's being fueled, as per Reuters here, confirming that the SEC is drafting blanket frameworks to streamline spot crypto ETFs. So this isn't just about Bitcoin. We have the Bitcoin ETF. Yeah. In fact, it's grown quicker than any other BlackRock product ever over this past 12 months, the Bitcoin ETF. We've got crypto ETFs. So in other words, we've got a very crypto-friendly SEC, let's put it that way. Yeah. And I think they're just about to become even more friendly over this next period of time because of what's happening this week in what's called Crypto Week in the US. Then you've got OGs like Jack Dorsey, original gangster, that means OG. Right? The people who've been owning Bitcoin since 2015, they were called OGs. Yeah. And the whole idea here is that he's moving the technology further and further and further so that these days on his new application, new platform, we've not tested it yet. We don't know anything about it just yet, but we'll learn about it quickly. You don't need the internet now to transact sound money. Just a telephone connection, right? So we're going to watch that. We've known about this for some time. You've still got the know-all brother-in-law who talks about what happens if the internet goes down, all that garbage. But at the end of the day, the world's got bigger problems if the internet goes down than the price of Bitcoin. I promise you that. So the whole idea is to find different ways for people to interact with each other in sound money. Nothing to do with the internet. It's nothing to do with price. It's nothing to do with anything else other than the fact that people want the freedom to be able to interact in what's called sound money. That's what changes the world. Fix the money, fix the world. And we're tracking people like Cardone as well. Another one, very much like Musk a few years ago. Oh, Bitcoin, I don't understand it. They don't get it. It's not doing anything for us. All of a sudden, one of the biggest evangelists you'll find. Crypto is now his new baby. as he moves real estate, large deals, biggest deal ever done when it comes to real estate conversion to Bitcoin, $5 billion just last week. So those types of things are what I'm talking about, that create the momentum, put the wind in the spinnaker, that allow us, as little old us, simply to follow the money. Second page of macro, like I say, I'm struggling to get it into 2 pages, but I'll well keep it at 2 pages because I think it's a bit much, if any to do anymore. But BlackRock CEO, Bitcoin will dominate the world as a reserve currency over the dollar. You may have recognized this graph here that we've used in DBM for many, many, many years. Back in the day when I was doing the blockchain assets course, 5, 6 years ago, we talk a lot about this, how there's a pattern. Yeah, there's a pattern. Portuguese, the Spanish, the Dutch, the French, the Brits, the US, right? Over time, as commanding the reserve currency. No coincidence, every single one of those flags commanded the world currency through war and oppression, right? That's just the way it is. That's just the way humans are. And then you've got this new era, as I touched on before, where this particular currency, known as Bitcoin, is owned by the people. So it's a globally interconnected reserve currency of the people, for the people, by the people. And that sounds very romantic and idealist. I get that. But as people understand what the internet has given us to be able to communicate with us the way I'm doing right now, for the cost of a broadband, especially what's going on with AI, Grok 4's out now, and that is more powerful than any given number of PhDs you can possibly imagine. You get the information in 2 minutes. Think about that. Now, with all that working around us in our lifetimes, we're able now to foresee a future whereby the world's reserve currency will be interconnected on sound money immutably, held in hundreds of thousands of different computers in that sense, that gives us all a chance to own a little piece of all the energy in the world. We've seen that years ago. People are just starting to see it now. We just happen to own the asset that is now giving us the ability to put our lives in good order, which means then we can go and help other people put their lives in good order, even if they don't understand it or realize that the US dollar is currently the reserve currency. There's over 2 billion people on the planet haven't even got the privilege to understand what a bank is. That is profoundly changing as we go forward, led no less than a country called El Salvador. Last week, they published unrealized profits for their Bitcoin holdings that they've been building just over the past 6 or 7 years, by the way, of $400 million. I'm not sure what the population of El Salvador is, but I know it's not that big. That is an example of what happens. So crime's down, standard of living is up. He's revolutionized that country. The guy is called Bukele. We'll research him and have a look at what he's trying to do. Some very, very interesting things that he's up to. New academic research. I thought about putting this as a full slide today, but I think I'll cover this in the workspaces in the academy because it's very detailed. But new academy research we picked up on last week that Bitcoin hitting $1 million as early as 2027 and 5 million by 2031. If you look at the numbers and if you look at all the interfaces going on between what we can visualize and actually see on the blockchain, talk about Bitcoin, in terms of demand and supply, they all converge at the same time. There's about 5 different ways that Bitcoin is provided and consumed in that sense. And this report goes into great detail about the mathematics behind price discovery. Now, are we going to get hanging our hats on 1 million within a couple of years and 5 million within 5 years? Not really. It doesn't really matter to us. What we're looking for is steady growth. Of course, we're going to get some pullbacks and price corrections. Of course we are, but we can build those in. If you listen to what I talk about in part 2 of this call, you'll see how we already mapped that out. We've already mapped out our planners out till 2028 on the basis of relatively conservative CAGR. If we get to 1 million in 2 years, then you're set for life. you're set for life. And those of you who have worked with us over the years with the DeFi projects and we're looking for flows coming back round again and injections of cash, you need to be prepared for this. You really do, especially on security. Satsuma, which is an interesting term. Satsuma, yeah, Satsuma. That's a company that is now live and kicking in the UK, thankfully. You wouldn't think it listening to the UK government or the Bank of England, but there are some very, very, very clever technologists and entrepreneurs and drivers in the UK, obviously. And Satsuma has been launched last week, which is going to be one of the treasury-based companies, the same as you've got with Master and MicroStrategy and everything else like that, right? So if you're based in the UK, maybe have a look at what's going on with Satsuma. ETF BTC inflows hit on the 10th of July. This is when I was doing some research on, which feels like a lifetime ago now, but it was only last Friday. Why has Bitcoin suddenly gone big guns? What's been going on there 4 days ago? So we had to do some analysis and we looked at the ETF BTC inflows. 1,175 Bitcoin hit the ETF markets on Friday. The average to date, the average daily to that point was 350 per day. Go and learn how to do that and figure out what this next cycle is likely to be. In fact, we're living it in it as I'm speaking to you because Bitcoin is now 123. Right? A lot of that is being driven by the ETF inflows and in combination with the fact that the OTC supply is so low. Now, it won't persist and consist at that rate. We don't want it to. We want steady price discovery. Okay? We want higher lows. That's the best way, as I'll talk about in part 2, to manage your portfolio because you're looking to cream off parts of your Bitcoin to be able to reallocate into cash flow. That's the whole idea of a sustainable digital business. Protocol improvements, let's say, in terms of what is being given the green light, which is important here. Crypto staking, profoundly challenging, profoundly and notoriously full of shenanigans. But under new SEC rules that are coming out this year, solo delegated and custodial staking tied to consensus, so POS consensus, they've now determined are not securities. Okay, so that's technical, but it's very, very important because that space has just been very, very difficult. But the whole idea now is we're getting some regulation and organization and ability to put ourselves in a place where we can have some reliance on what is a very nice and neat technology. You know, you've been able to provide liquidity to a staking platform that provides you a yield is a fantastic machine in your Bitcoin factory, in your blockchain factory. But it's been very tough because things move around so much. But we're looking now to see some clarity, which hopefully will come through starting this week. And as I said at the top there, BlackRock, ETF, the Bitcoin ETF, surpassed 80 billion in asset value last week, which makes it the fastest ETF in their world to ever make it to that level of value. The Bitcoin ETF, the most successful product that BlackRock has ever created. Think about that. If you know the size of BlackRock, you know how profound that is. Right, to wrap it up, let's have a quick look at some geopolitical stuff to make sure that we're cap and collaring all this information, which I know has a lot of information and I know I dump it out once a week. But I think, you know, if you want to go back and review and look at the recording, you're more than welcome to, because all this is very important to understand, as is the geopolitics. Okay, I've touched on it a bit already. Okay, Cleona went into a much deeper workshop on this earlier today. So you'll find the recording over at the Systems Plus forum where she went through these 3 bills that are coming through this week. Okay, so you've got the Genius Act, which we already know about. That was put into discussion a couple of weeks ago in the Senate, and they're now moving through that into the House, and they're going to do more discussion on it. Anti-CBDC surveillance. If you listen to what I was talking about last week, the difference, as I was talking about earlier, between where the Europeans seem to be headed, which are leaderless, right? they're more led along by the ECB than the actual politics of that continent, right? Which is part of the problem. So the European lobbyists from the ECB are driving towards what are called central bank digital currencies, so CBDCs. So this is not to be confused with anything to do with blockchain, anything to do with Bitcoin, anything to do with crypto. CBDCs are digital, absolutely, but they're 100% managed by the central bank. I've done workshops on this many times over the years. Not something that we're interested in for all the reasons that you should know. Whereas the America model, the USA specifically, is going through anti-CBDC, but going all in on what are called stable coins, which are on blockchain rails, right? But they're not that different if you look at where they want to keep the control. So obviously the US wants to maintain the US dollar as the primary currency of the planet, obviously. And it knows it needs to do that by selling more treasuries and getting more and more countries sucked into how the power, the vortex that create, the power of the American economy. So it knows it needs to do that in more efficient ways, basically. So it's providing stable coins to the world, which it already has been in many ways. Those of us who have been utilizing the strength of the US dollar for many years, and it wants to make that formal. That's what the Clarity Act brings. Okay. Now, as I said last week, whether it's CBDCs or whether it's stablecoin currencies, they're all still currencies at the end of the day. So what they're providing is rails on which we are able to live our lives, but they're not. What we don't do is earn in that and spend that, right? We pull ourselves away from the normal currency rails by moving into sound money, gold or Bitcoin, and gold and Bitcoin ideally. And then we utilize that balance sheet, which grows exponentially of its own volition because of those currency rails, which allows us equity to be able to siphon off, as I'll talk about in part 2, to be able to use the global economy to build our own private treasuries. That's the difference. So it doesn't really matter, right? If you're going to get into a more deep level on it, then I think it personally does matter if people are going to work 100% on CBDCs because of the surveillance side of things, right? With stablecoins, I stand to be corrected on this because they may bring in through the Clarity Act ways to, let's say, take away the anonymity side of things. In fact, I'm pretty sure they are going to do that. So the whole idea is still to, be on your toes when it comes to where you want to sit in terms of sovereignty. But if you work the way the DBM model works, it doesn't really matter because you're only using the rails. You're not beholden to the rails, as many people are right now in full fiat, for example. Yeah, they're 100% working in the fiat system. They're earning in it and spending it. Whereas with the model we talk about, you're outside of that because you send that energy outwards to sound money, and then you are the decision maker in how much of that sound money you send back. Okay, so in that sense, it's a benefit to us, but at the same time, it's going to be interesting figuring out how we can make sure that we still hold our own sovereignty. All right, so it's quite a big topic that we'll probably come back to it in future discussions, but you'll see from Cleona's workshop today that you can go and review and listen to how interesting it is. All right, so the 14th to the 18th of July, which is this week, is massive for us. Okay, it seems that the market's already bought ahead of that, which is why we're on 123,000 from 110,000 in less than 4 days. So we can expect some sort of pullback and correction. That's okay. That's okay. I'll show you in part 2 how we put a buffer in, so it doesn't matter to us what happens with near-term price. It's a case of making sure you're in full control by managing your balance sheet. Now, on a bigger level, US inflation dipped below the Fed's so-called goal of 2%, which is absolute arbitrary, ridiculous number. It's fallen below that so-called target level. So Jerome Powell, he has no excuse now, right? He's clearly politicized the Fed again. So we'll see what happens. Now, where that goes next, out of the frying pan into the fire, it is what it is. Doesn't really matter to us. All we do know, as a result of this big, beautiful bill, and as a result of the increase in the debt ceiling, and a result of this perceived management of fiscal and monetary policy that the central banks and the governments pretend to have, it just means that they print more currency. And as I said at the top of the call, the more currency they print, the more our assets become in price. So we achieve equity. Right? Doesn't mean they're more valuable. But we are getting to the stage, and it sickens me to say it out loud, but we are getting to the stage where it's like, well, crack on. The longer fiat currency exists, which is probably going to be the rest of our lives anyway, then the easier it is for us to build a balance sheet. That's the perverse nature of it. It shouldn't be like that, but that's what's happening because we understand sound money. And as everybody else jumps on the bandwagon to try and get into sound money, and there's only 21 million of the asset available, guess what happens? That's why we know where Bitcoin's headed. That's what is the life-changing aspect of what's called a wealth transfer. Without blowing smoke or trying to come across as too clever, that's what's happening. That's what has happened for anybody who's been owning Bitcoin over the past decade. What a refreshing way to live. India and its unique position in terms of the global population that it represents is establishing a Bitcoin reserve as of last week, jumping on the bandwagon. The sovereign level of BTC blueprint, which is the El Salvador thing, okay? So for me, as I mentioned before in the macro, what Bukele has done is not just brave and profound and clever, and obviously he's got Max Kaiser in many ways to thank for this. He said that publicly. But now their Bitcoin stash has broken the 2 billion mark in terms of dollar equivalents, with 400 million, whatever it was I said earlier, in terms of unrealized profits, just as a result of them accumulating Bitcoin over the past few years. Some very interesting things are happening to that country. And I am sure that many, many countries in South America and Africa in particular are observing what's going on. They just need brave leadership to pull it off. Because what's happening in El Salvador is that they're basically borrowing against their own BTC to begin to extinguish the IMF loan. We all know the IMF are the economic bullies of the world, coming across, as helping countries out, but they're actually putting them under the cosh, and the US in particular, and Europe obviously, have benefited from that for centuries. Yeah, they've just formalized it in the form of the IMF in the 20th century. But now El Salvador is starting to extinguish the whole loan on its own merits, just like we would as individuals extinguishing mortgages or credit card loans by leveraging our own balance sheet with our own Bitcoin treasury. They're doing the same type of thing at a country level. So now they can roll out in perpetuity on their own terms, and while continually stacking sats, just like we do, as I'll talk about in part 2, to grow that through. Yeah. And in the meantime, they're still able to leverage the existing IMF funding that he's already written in and signed off and in place. And he's basically put 2 fingers up to the IMF, saying, who did only a few weeks ago say to him, if you don't stop buying Bitcoin every week, you buy 1 Bitcoin a week, then we're going to stop your loans. But they can't do that because that's illegal. So he's still using the funds coming through the system to go and put it where it should be and not paying off debts and, outlandish interest rates. He's putting it into roads and schools and infrastructure at the same time as extinguishing the original loan. So if countries are doing that, that's just going to cascade to other countries now that have been under the cosh of the IMF and the US and Europeans for centuries. And those people like us are observing that. In fact, we've been doing this before the El Salvador. The whole thing is about us doing the same thing in our life structure. Yeah. The benefit being, of course, that as country level does it, as sovereign level does it, as institutional level does it, as company level does it, then that just makes our job easier as individuals, because the whole interconnected asset base gets lifted together. That's the beauty of the model. White House confirms that Bitcoin and crypto structure bill will be done by September. Okay, so we're looking at the three bills going through this week we've already discussed, but then there's the much bigger crypto market structure bill, which is a very, very big deal, which is why we have absolute confidence of Bitcoin's price discovery going up and up and up, at least for the rest of this calendar year. Okay, what you do with that is the clever bit, and that's why we work together to figure out where to allocate. And then last but not least, the House confirms that the market structure bill will be on the floor this coming week. Okay, so that's on the floor. That's not signed off and confirmed. That's later in the year. But getting it on the floor, and then someone like Kevin O'Leary can see trillions of dollars, treasury-based dollars, coming through into Bitcoin once the market structure bill passes, which it will. It has to. That's what we're talking about with the wind in our sails and us driving forward. All right. So the political level is profound. There's a lot more I can talk about in the politics, including what's going on in Russia, including what's happening over with the BRICS and in the Middle East, etc. Huge brinkmanship going on there with wealth transfers and people keeping an eye on sovereignty and all sorts of things. If you want to know more about that, you can review past videos that I've done about that topic, because it's very, very connected and it's very interesting. All right, so hopefully that was useful. Like I say, a lot to take in there every week, and we appreciate that. That's why we have this structure whereby you can come in and talk about these types of things and get your ducks in a row when it comes to what you're doing with your treasury, your balance sheet, and your cash flow, and connect the two together, and most of all, get the support to do what it takes to keep going. That's the hardest bit, of course, because this space is lonely, because you are working predominantly on your own. So working together is always better. Stronger together is always better, and we're here to serve. Appreciate your time. See you on the next call.